there, welcome back to my channel. My name is Brittney Bundles, and today's video is going to be a video just giving some off of the top of my head advice for credit or for building credit. I do get questions very frequently about credit building and rebuilding and how to all around become more financially responsible and how to boost credit scores. Now, I did record a video about a year ago going over the importance of having a strong credit profile, because a score is not all that you need to obtain different things in life. For example, a score is not the only thing that you need when wanting to obtain a home for a mortgage, or wanting to obtain a mortgage for a home, excuse me. A credit score is not the only thing you need when you are wanting to lease or purchase a certain car. A credit score is not the only thing you need when you're wanting to take out a personal loan. There's more factors that goes into being able to have more spending power in the form of lending options. And every financial institution is different. So I made a whole video kind of going into that. So if you are interested in more videos like that, be sure to check out my credit playlist. But today I'm just going to be answering, or not answering really, but just explaining some credit tips that could help those out there looking to rebuild or boost their credit, strengthen their credit. So if you are interested, be sure to give the video a big thumbs up. Please make sure that you are subscribed, and let's get right into the video. Brief disclosure, I still am recovering from my cold, so my voice sounds a little under the weather still, and I am in a different filming space, so bear with me. I know the lighting may not be the best, or maybe okay, I don't know, let me know. But this is where I'm at for right now. So I do want to say this. The first tip that I want to go over, and I don't have any notes or anything with me either, I'm just giving you tips off the top of my mind. The first thing that I want to go over is being really conscious about which accounts you let go to collections. There are a lot of people that just let accounts go to collections because they choose to use the money for something else. Now, there are times where you may find yourself in a financial bind and you have to decide between buying food for your family or paying your debt off. Now, I can't tell anyone what to do in their household, but I'm telling you, if it was me, if I had to choose between food or paying off a debt, I'm going to choose food. But if there's something where I'm in a position where I have to choose like a vacation versus paying off my debt, I'm going to choose to pay off my debt. So be very conscious of what you allow to go to collections. And before those accounts even get to collections, be proactive and call. If it's a credit card, call the credit card company. Let them know what's going on. If you just lost your job, if you have had a tough week this month tough week this week with finances, or if you have taken a pay cut at work, give them a call and let them know. A lot of times, there are different financial assistance options with different card carriers as well as different lending institutions. They may need proof, and some of them don't, but you always want to make sure that you can be proactive if you can. Also, if they don't have any options as far as working with you on putting the payment to the end of your loan, or working with you as far as putting you on a payment plan, an affordable payment plan for you, or allowing you to skip a payment, whatever the options may be. If those aren't available, they also may have an option for them to somehow hold off with turning your accounts over to collections. Typically, different credit accounts and loan accounts aren't going to immediately turn your accounts over to a collection agency. More than likely, there's going to be a few missed payments and a few notifications sent out or provided via phone or email before they go that far. But we do want to make sure that we're doing everything we possibly can to keep accounts off of our collection so that we continue to keep a strong, healthy profile. Now, the next thing that I want to talk about is making sure that once your collections account is, or once your not collections account, but once your credit gets to the point where you're like, look, I've paid off my debt. I have paid on time on my auto loan. Why is my credit score not increasing? Why am I still at a 540, or why am I still at a 560? How come I'm not going to 600? And a lot of people have that concern. They're wondering why. I've paid off my debt and I'm making on-time payments, so why is my score remaining the same? And sometimes the score may even drop. But in order to maintain a healthy profile, there are additional accounts that may need to be added to your credit profile in order to boost that score and to also affect the overall health of your credit profile. So for example, if you're in a position and you have paid off your debt, like I mentioned, and you're paying on your car note and your credit score is not going up, you may want to consider adding a credit card. That's an unsecured revolving line of credit that can also help build your credit score and build your credit profile if you use it correctly. A lot of times what ends up happening is people open the credit cards and they're not responsible with them, so they max the credit card out, or they just don't know the 30% limit rule. So having a credit card can not only build your credit and build your credit profile, but it can also tear it down if you're not using it correctly. So a credit card can be used as a great tool in addition to the current loans that you have, or in addition to loans that you may get in the future. But overall, having a credit card is very helpful when it comes to building credit. Now, I do want to say this, having a credit card is not the only thing that's going to build your credit. You also want to be very conscientious of your debt to income. So a lot of people also do this. They go out and get tons and tons of credit cards. Some credit cards they don't use, and those cards get closed by the card issuing company. A lot of times when that happens, it doesn't affect your credit score unless you actually go ahead and close that credit card. But they go ahead and get all these cards, and either they use them or they don't. And if they don't use them, it's kind of pointless in the aspect of building credit. And if they do, then a lot of times it begins to rack up debt. So it can begin to knock off your debt to income ratio. And so when you're going to apply for a loan, you may notice that, okay, I've opened credit cards, so my score is no longer 540. Now it's 612, but I'm not approved for this specific card, or I'm not approved for this specific loan because my debt to income, due to all of the cards that I've taken out and all of the balances that I've racked up, they're out of whack. I have more debt than I actually have income. So at this point, I am a risk to a lot of different lending institutions, and some lending institutions just don't want to take that risk. And so what happens is, if you are really needing a loan, you go ahead, and I'm saying what happens, in a lot of cases, you go ahead and you try to apply for different loans in different places. And every time you do a hard inquiry, it does have an impact on your credit score 9 times out of 10. And that impact is going to be a negative impact, lowering your score. So now you're noticing that your score that was 612 is back down to 590. And so it kind of stays in that cycle. So what I can recommend doing is, like I mentioned, get a credit card, but do stick with that 30% rule. And also be sure that you are using the cards that you have, but using them responsibly. So if you are in a position, which brings me to my next tip, making sure that you're using all of your accounts for your benefit. If you're in a position and you have a credit card and you have an auto loan and you're paying on the auto loan and you're revolving a 30% or lower balance on your credit card, and you're noticing that your score still is not going, and you're not getting any additional collections, you're making on-time payments, you may want to look at opening another credit card. And you may want to look at seeing what else could be affecting your credit score. There may be a collection on your credit report that you thought was taken off that hasn't been taken off. But nevertheless, we want to make sure that we're using all of our accounts to our benefit. There are some accounts that can be paid off with a debt consolidation loan. There are some collections that different lending institutions would be willing to wrap into a whole debt consolidation loan. Therefore, it helps to remove that collection off of your credit report, because the bank or the financial institution is going to pay off that debt, and then you're going to be responsible for paying off the financial institution by making monthly payments. So sometimes that works with boosting your credit as well. So overall, not everyone's credit report is the same. It's not an overnight process where you can just do one thing and then your credit just skyrockets. I don't really believe that you can go ahead and dispute all of your collections and then automatically they're just magically removed and your score just goes way up. Even if that does happen and your score goes way up, as a previous loan officer, we were trained to look at the credit profile, like your whole credit report, to see how responsible you have been, to look at the debt to income ratios, to look at ultimately how much of a liability or an asset you would be loaning out a credit card or loaning out loans. And so even if your score goes up, but it shows that you have disputed all of your collections, or it shows that you don't really have, you've never had a larger loan than $1,000, and then you're coming and you're asking for a loan for, let's say, $100,000 for a house, it may be very challenging for you to do that, even if your score is high. So I do try to tell a lot of people, when you are looking into different credit repair agencies and credit repair tools and services, be sure to ask questions as far as if they're, to see where their end goal is. Is their goal just to give you a high credit score, or is their goal to provide a healthy credit profile for you? Is their goal to just dispute all the collections, or is their goal to make sure that they're building up your credit profile in the most beneficial way that they possibly can, by going over different ways and different tools that you can work with to start doing that? But it's not an overnight process. So just off the top of my head, those are some tips that I wanted to share with you all. I do consider us all family, so I just wanted to share that with you if anyone's struggling with credit. And if you have any more specific questions or need any more, advice or tips or insight as far as building your credit report and your credit profile, be sure to leave them down below. I enjoy helping. I do want to thank you all for watching, and I will see you all in the next video. Bye.